I'm Orlando for Trading Mall. And what we're going to do, we're going to start by looking at the news terminal, guys. We are going to, well, it has been a crazy day for uh, Prime Minister May. So what we're going to do, if you look at the top left of my chart, of my, not my chart, but my screen, this is where we are going to be reading the news that came out of the United Kingdom. All right, so we're going to start. We're going to go back to right now. It's 6 a.m. my time, and we started. Well, I started at the news out of the UK popping out at around 3 to 3:30 my time. All right. Yep. This is the first. So right here, the Huffington Post co-editor tweets, so looks like withdrawal agreement bill won't be published tomorrow. More likely in draft as a command paper, one source tells me. Earliest date for presentation is the first, for the first reading is Tuesday, June the 4th. So basically, there's not going to be a vote on the new resolution or Theresa May's New Deal just yet. And right here, this was a very interesting news. Graham Brady says 1922 committee will allow no confidence vote in PM if she does not announce resignation date on Friday. So that is huge because right here, I mean, what they're saying is that they want PM May's head on a platter. Right, they don't want her as a PM no more, so they're giving her until Friday for her to resign as prime minister of the UK, and if she doesn't, then they're going to hold a no confidence vote in the PM, which means that the Parliament is going to vote on whether they feel confident if PM or Prime Minister May should continue on her post as Prime Minister. All right. Now, after that, we had another news hit the wires right here. UK government whip Mark Spencer does not list withdrawal agreement bill vote in business for week of June 3rd. And then we had comments from UK from Prime Minister May's spokesperson. The Prime Minister will meet ministers today and says the PM or the Prime Minister is listening to colleagues about their concerns on the bill and will continue to do so today. Right here, this is a great, this is important too. The spokesperson, Prime Minister May's spokesperson says PM wants to ensure UK leaves the EU with a deal. Only way it is to ratify withdrawal agreement, and says that the prime minister is focused on delivering Brexit. I'm sorry. Again, we had um, um, a comment about Theresa May. The suggestion at the moment is that Theresa May is trying to rewrite the withdrawal agreement bill to salvage it rather than writing her resignation statement. This is desperate stuff. So basically, what we have here is on one side, PM's asking for Theresa May's resignation, and on the other, Theresa May doing whatever it takes for her to pass her withdrawal bill. Um, Before anything happens. I mean, if you follow this show or if you tune to this show every day, we were talking on Monday, I think, yes, on Monday, about the 10 points that Theresa May made for her New Deal. And, there were some concessions that she made for the Labor Party, but apparently the Labor lawmakers are not budging a single bit. So let's continue. And right now, if you look at the center part of my screen, we had this one, first one, the Brexit news. Conservative lawmakers Mel Stride appointed new leader of House of Commons. And right now we have a comment about the oil market from U.S. Secretary of State Mike Pompeo. So basically, this is what's going on. Ah, wow. Yeah, I forgot to tell you about another thing that is crazy about what's happened with Prime Minister May. Apparently, the police are yes, right here. Police are calmly directing tourists onto other streets as they investigate suspicious item near Prime Minister May's office. So not only she has PMs asking for her resignation, and on the other hand, she has she's doing whatever it takes for her to pass her withdrawal bill or her deal, but she also has to deal with some threats with the outside of her office. All right. So basically, this is what's going on the news side of today's Daily Edge. So what we're going to do right now, we're going to take a look at crude oil. Right now, if you remember, if you follow me on social media, or if you are a premium member, if you're not a premium member, I'm going to leave you on the chat a link where you can go and get a 1 month trial of our premium services. Remember that everything that we are going to be looking at right now goes first and on time to my premium members. So if you want to take part of well, our premium community, just take a 1 month trial. Um, the link is on the chat. So basically, if you follow me on social media, or if you are a premium member, you might remember by the end of last week, we were talking about this big level in crude oil. The big level that I'm talking about is the one that is on the upside, that had capped crude oil to the upside, which are these two magenta lines, and which is the 61.8% retracement of this move to the downside. Now we're talking about this move to the downside. um I'm sorry, this is the move to the downside that we are talking about. So price went from the highs at around 66.75, $67 per barrel to the lows at around $60 per barrel, and then it started to retrace inside of what seems to be a bear flag. And we if you look closely, I'm going to point out a, uh, actually, what I'm going to do is I'm going to point out the movement here inside of the flag with this. All right, and I'm going to change the color, and I'm going to use a bright yellow. All right, to point out the movements. So basically, we move from this high right here to this low right here. All right. And after this movement, what happened is that we moved inside this bearish flag. All right. This is the pole, and then the movement inside of the bearish flag. I don't think that uh, the yellow is a very good color to be pointing this out. So I'm going to use a bright um, blue. All right. So after this movement to the downside, we went up to the bottom of the flag, and then we went down, and then we went up, and we were capped right here. All right. This is where we were capped. This is the level that we were talking about in the premium community. This is the level that we were looking for a reversal. And what happened was that we tested this level twice, and when we tested it again, price dropped uh, for about 350 ticks. So what happened? Let me just thicken this out for you guys, because I'm going to show you a couple of candles. All right. Now, if you follow me, you can, I mean, you remember that during this day right here, let me point it out with a square. All right. This day right here, we had news coming out of the oil producer of some of the biggest oil producers in the world. Venezuela's output had dropped to a 16-year low, and Saudi Arabia's oil output had also dropped. So basically, that is bullish for crude oil because the lower the output, the higher the price. All right. And what we had here is that, well, we had a very bullish day. This is the 4-hour chart. And if you look at these low levels right here, you can see that we tested the previous day's lows, and then we went all the way up to test our capped level to the upside at around 64. All right. And bulls were unable to break with to break with the level to the upside. When we had this rejection candle, well, bears took control of the market, and as you can see, we dropped below this. We dropped below the 61 level, which was the level that we were looking last week as a buy zone. And I'm just going to zoom in on the chart. All right. I'm going to zoom in like this. And we broke with the flag. All right. The flag is uh, the bold white continuation pattern that we have right here. All right. This is the flag. But if you look closely, guys, we also broke with a longer term bullish structure. All right. If you look closely, let me show you what structure I'm talking about. This is the structure, or this is the bullish structure that I'm talking about. From the highs, I'm sorry, from the lows around 52 to the highs are around 66. But we broke with this massive trend line to the downside. All right. And because we broke with the bearish, um, I'm sorry, yeah, the bearish flag, the long-term bullish structure, the immediate zone of support, and now I'm going to zoom in again. Now we are testing this previous area of resistance, which is a high value zone and also a high volume zone, a historic zone of high volume. All right, because we are breaking it, and it's pointed out with this magenta dotted line at around the $60 per barrel. This is extremely bearish to me. So what we are going to be doing right now is we are going to be looking to sell rallies. All right, maybe we will have a a drop and then a retest of this level for an opportunity right here of a continuation to the downside. So this is what we're going to be waiting right now because, the move that started at the highs or at our high value zone around the 64 area or the 61.8% retracement on the downside is already gone. We missed it and we're not going to be chasing it. Well, we didn't miss it. I mean, this was our value zone. If you're um, a premium member, you already knew that this was our value zone and this was a zone to sell crude oil, right? Um, if you took it, well, kudos to you because the analysis was very strong for the idea of shorting crude oil. But if you didn't, what we're going to be doing again is selling a rally. We're going to try to sell a rally back to this high value zone at around the $60 well, the 60 to 60 point $7 per barrel. All right, for a continuation. And our next zone or our next target is going to be way below here. Let me just zoom in just a little bit because I want to point out why this is an important zone. And here you go. This is why this is an important area. And not only that, but this is the 161.8% retracement of the flag. So this is a very strong bullish target, and this is going to be our next well target and our next value zone if we are able to sell our rally back to this broken area. All right. Now this is crude oil. If you have questions about it, feel free to ask. Right now, we're going to go and watch the DXY. You know that DXY is the is the US dollar currency index. And if you are a premium member or if you know how I trade, I'm always looking at the DXY for clues on where the dollar is going to go. I'm sorry, I just took a sip of my coffee. So the US dollar index, right? Big bullish move. And if you look, just zooming in, all right. And if you look at what we had drawn here, and if you follow this daily edge show, you already know that this is the move. This white line that I drew is the move that we were expecting. All right. And well, we were. This is the move that we were expecting once we broke. I'm just going to point out this zone of resistance right here. All right. Now, this is the area of resistance or the next zone of resistance that I would want. Actually, is the 93. I'm sorry, the 98.30. So I'm just going to double click here, and I'm going to put on the correct coordinates on my chart. All right, because what I want you to look at is the mistake that us traders make over and over. All right. So first of all, let's have a look at the U.S. dollar. All right, and this white line that we have drawn here is the line that we broke with this magenta triangle, and then of course when we broke with the 97.70 level and the bigger triangle, which is the yellow triangle. Now the 97.70 or the break above the 97.70 level, it was a big deal for us, and of course for every true forex trader, because the 97.70 level was the level that was capping the US dollar index to the upside. Now, if you remember, if you don't remember, let me show you. We have time, and I'm going to go to the daily chart. And as you can see right here, capped by the 97.70, capped by the 97.70, capped by the 97.70, faked that above the 97.70, below the 97.70, and now we are in a really big bullish move to the upside. All right, a clean break of a clean break above the 97.70, and then a bullish continuation. All right, let's go back to the 4-hour chart to have a closer look at what to expect on the DXY. All right, now I'm going to grab again my brush. So this white line that we have drawn here is the expected move that we were looking at for on the US dollar. All right, and the levels that or the big levels that we were looking at was the 98.10, which was this level right here. Boom. And the next one is the 98.30, which is this rejection right here, or this high. Now, these are the two levels that we were looking at on the DXY. And if you look closely, not only that, but this is the 161.8% retracement of the last leg down of this move down. All right. So we moved from this rejection on the 97.70 to this low to a complete 161.8 retracement. All right. Big bullish level, big bullish level. And the mistake that most traders make is this. I mean, take a look at this high right here. If you, well, if you are, if you are, if you join us every day on this daily edge show that I do, you know that we were looking at a fake or a bear trap right here because the true level that needed to be hit in order to have a good retracement was the 98.10. We weren't quite there yet, and as you know, bears got trapped, and this is the level where we found actual sellers. You can see that we tested it once, boom, big sell off. We tested it twice, boom, big sell off. And now we broke to the upside, and we haven't quite gotten to the 30 level again. And now we are retracing back. Um, well, we are retracing back. Let me just grab an eraser. I think that this is the, yeah, this is perfect. And now we are moving down to this previous uh level of resistance. All right, level of resistance here, and again here, big move to the downside, big bullish targets to the upside, the 161.8 the 161.8% retracement of this leg down, and the upside we didn't quite get to the 98.30, and now we are back. We are retracing back to this level. So basically what could happen is that we are going to be retracing back to this level and test this broken resistance level as support before we test the we truly test the 98.30 for maybe a break above. Because if you know me, or if you follow me, you know that um to me the when I mean the DXY being traded above the 97.70 is extremely bullish. And right now we are not going to be looking to sell the US dollar, um even though I'm going to show you I'm going to be showing you what we have going on gold. But above the 97.70 level, we are extremely bullish on the US dollar. All right. So basically, this is what I'm looking at. Maybe I retrace back to that 98.10 level, which is also this big bullish target, the 161.8 retracement of the last leg down for a continuation and and a retest of the previous highs at around the 98.30, maybe a little retracement again for a continuation higher. All right. Now that's what we have, or that's my view on the US dollar. And now let's go to the actual charts. All right. Okay. So what let's start with gold. All right. Let's start with gold. And let's have a look at what's going on here on this chart. Now, big bullish day in gold. And well, the reason that I wanted to show you this gold chart is because, yeah, I mean, we were talking just a few minutes ago about the US dollar and how we are actually very bullish on the US dollar. But some of you might ask me, if you're very bullish on the US dollar, why is it that you have a buy position in gold, right? Because they're inversely correlated. Well, yes, gold and the US dollar are inversely correlated, but not 100%. Okay, and And you have to know, well, you have to see what I look in this chart. All right. And what I'm looking here in this chart is this small gray zone, right, at the 127.2 um, retracement of this leg as a very strong buy zone. Let me just thicken or zoom in on this chart. All right. Now, if you look at this, you can see that after this big bearish move, that's where we found buyers. And then sellers took control of the market again when we hit these previous lows. When we hit these previous lows, this is where sellers were positioned for a continuation lower, but we were unable to break with this, uh, again, with this very strong buy area. And we hit these highs. And we broke with what seemed at the time be a continuation pattern, but then again we realized it wasn't, and we went all the way down again to this buy zone, and but we didn't quite get there. And that was I mean that was the main reason that I was a little skeptic about taking this long position. I mean, if you are a premium member, you already are in this long position. But if you're not, this is not a trading advice. I'm not advising you to buy gold. I'm just telling you what position we are in, and don't chase the market. That move has long gone. If you get in right now, you're going to. I mean, your risk is going to be extremely high, extremely big. I'm sorry. So to go back, this is why I was a little bit skeptic on taking this long position. Is this because of this? Well, this week right here, we didn't quite get to test this level of support, or this zone where buyers are positioned, right? We didn't quite get there. And because we didn't quite get there, in my eyes, this could have been perceived as a bull trap, right? Why? Because we didn't quite get there. So impatient bulls that just bought here at market because we were at around a very strong area of support, could have been, in fact, uh, swiped out with the sellers breaking below it once we had the real test. But if you look at this daily candle right here, this is a strong bullish candle, which engulfs the last three trade. Well, it doesn't. Well, it really doesn't engulf the last three trading days, because it really doesn't engulf the middle one, but it has erased the last 3 days losses in gold. So very strong move to the upside in gold right now. And yeah, I think that our long position in gold is now well, has now a better probability of going our way. All right. So basically, what we are looking at right here is the 1284 50 level, which is actually this big level where buyers were found. Yeah, where buyers were found, and where sellers might be positioned. All right. This is going to be the tricky area to break to the upside. But again, this is a very strong bullish move. If you go to, well, this is the daily chart, right? If you look closely, this is a bounce of a very strong um, uh, line, which is the support line of this entire bullish structure. So basically, if we manage to break with this previous high And well, if we manage to break with this previous high and the upper magenta dotted line at around the 1306 level, which is a big level because of this buy zone and this sell zone. If we manage to break with both of them, with this dotted trend line, which is, well, also will be breaking with the previous high, and with this zone, we might see gold test these highs at around 1341. All right. These are my views on gold, and this is the reason that we have that. Well, we are in this buy trading gold. All right. Very well. We dropped to the 4 hour chart, guys, here, and as you can see, this is a very bullish reversal at this area. A lot of bulls jumped in, a lot of other buyers jumped in, and we expect a continuation at least to test these zones at around the 1297. All right, this is gold. We already had a view on crude oil, gold. Let's have a look at the pound versus the dollar is doing. Now, the pound versus the dollar. Um, well, I'm going to go to the daily chart and I'm going to show you the levels or why are these levels on my charts. Now we're going to start with the lower magenta level. The reason the lower magenta level on my chart is there is because of this very strong reversal zone or reversal candle, daily candle right here. The 126 zone to me is very important, and this is where we have bounced from at the moment. The next level will be the 2695 zone, which is this buy area right here, and and above that would be the 2695 zone, which is this buy zone here, and above that would be the 2880 zone, which is this buy zone right here. Now, I'm just pointing out this because I want to share with you my views on why these levels are important, right? If we go back to the 4 hour chart, um, let's go back to the hourly chart, right? Right now, yeah, we bounced from the 26, and again, we didn't quite get to the 26. We actually got to the 2604, 4 pips above the 26 zone. But I mean, it really doesn't matter. Yeah, you have to know that support and resistance zones or buy or sell areas or value zones are not exact levels, but are more areas than others than exact levels. We draw lines just to visually know, just for an visual representation of the zone. But that's not that's well, it is important, and what we're looking here is an appreciation of the pound against the US dollar. And if you look at this there's I mean, the pound versus the yen really isn't doing what the pound versus the dollar is doing. The pound versus or I'm sorry, the euro versus the pound is not also moving as quick or as strong as the pound versus the dollar. So what's going on right here is that we broke with this kind of wedge formation at the bottom. That could be considered a reversal pattern. But again, I wouldn't be a buyer. I wouldn't be buying the pound anytime soon, just because of what we saw on our news terminal and what's going on right now with Theresa May and her New Deal. Um, right, that hasn't been, it hasn't been rejected yet, but it's still yet to be redacted fully, and it's still yet to be parliament. All right, so at the moment I wouldn't be a buyer on the pound, and the reason also that I wouldn't be a buyer on the pound is because after we broke with the 130 level, 129, yeah, the 130 level right here, we moved almost 400 pips from high to low. So, in my eyes, we should, or we need to break above some important levels, or at least break above this level right here in order for me to even consider buying the pound versus the USD. What I would consider is just a move back to the 26.95 level for a continuation lower. But I mean, this move to the downside is really, or is really, well, it's really extended, and I feel that even if we get a move back or a pullback to the 26.96 level, we would be selling on a very overextended bearish move, which is very risky. All right, so maybe a move back, a big move back, or a big bull move back to the 27.95 zone, where we had this selling pressure, would be a better risk to reward scenario for a bearish continuation. All right, now this is my view on the GBP USD. And guys, if you don't have any questions, if you don't have any questions, well, I think that this is it for today's daily edge. Maybe let's have a look at the US dollar versus the Japanese yen, because we are in a buy position on this currency pair. Well, what we did is actually we bought this currency pair at around 109.70, 109.80, and we took profits right here at the first level at for around 88 pips. All right, that's, if I'm not mistaken, yeah, that's 87 pips. So yeah, we took that trade to the upside. The reason we took profits there is because this next value zone, and not only that, it was the 50% retracement of the entire move to the downside, and it was also a 213% uh, expansion of the first leg up, or yeah, this leg up. And the next level that we are looking at is the of the gap, which is also 61.80 of the entire move to the downside, and the 261.8 261.8 expansion of this leg up. So, well, we broke with this very structure to the upside, but right now we are testing this zone again. All right, this is the zone that sellers were positioned at, and then when we broke to the upside, this is the zone that we tested as support with before moving higher. So, yeah, our stops are below these lows, because if we break with these lows, we are breaking with that we have on our charts, and that will mean that the bullish move has ended, and well, that the bullish move is not going to continue. But for the time being, we do have half of our position still on, and we are going to be looking for a continuation to break with the 110.65 and and to test the 111. All right, basically that's it for the US dollar Japanese yen. And if you don't have any questions, well, I'm going to yeah, I mean, I don't know if you noticed, but we also have a competition going on in about 11 days. So it's a demo competition. Already, here is the page of the competition. It's a demo competition, but you can win actual cash prizes, or real cash prizes. And not only you can win actual or real cash prizes, but you can also win news terminals like the one I use every day on the Daily Edge, and you can win premium access, and you can win. Here are the prices, right? At Tradimos Premium Access 5, cash prices for the top three: $250 for first, $100 for second, and $50 for third. News terminals like the one I use on the Daily Edge, guys. This is a great news terminal. So you have already seen that. So for the top two finishers, they will receive 1 year of news terminal free from Redbox Global at a price of 600,000. I'm sorry, 600 pounds each. And the top three finishers will receive an Edge Wonk Trading Journal license valued at $169 each. So I'm going to leave you with .com competition with the link so you can register. You just go down and opt in here to register, and you're going to immediately receive an email with the two steps that you need to take in order um, to uh, to compete in our trading competition. And remember, I mean, if you want, I mean, it's completely free to join. It's a demo competition, so anyone can join and anyone can compete. And it's in 11 days. So heads up, guys. And again, thank you for joining me on today's Daily Edge. And if you're not a premium member, take the $1 trial, the 1 month, I'm sorry, the 1 month trial. The link is on the chat. And I'll see you guys tomorrow. Thank you for coming or showing up. Thanks. Bye.